Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com. And if you haven't heard, today is Facebook Friday. I'm sure nobody's been talking about it, I guess, for the last now month and a half or so. But you'll see it all day long on TV. And we've been trying to get everyone ready for it. As far as the market's concerned, I think a lot of people got a little battered and bruised yesterday because everyone was saying, oh, they're probably going to reverse the market on Thursday, get a good positive environment for Friday. Lo and behold, they closed stocks on their dead lows yesterday, flushing a lot of guys trying to anticipate that trade. And now we're getting pretty much the hard setup again, where the futures are up 4 or 5 handles. Overnight, they were down at like 1290, which was a really big support that we were wanting to buy this morning for a potential good type of reversal trade. So as far as the markets are concerned, we've met our objective. About 2-3 weeks ago, when that head and shoulders pattern, the head and shoulders topping pattern formed, we put an objective saying we think we could have a 75%. Everyone loves when I say 75% because that's the commitment measure, meaning I think it's a good chance we get there. Lo and behold, yesterday's low was 1304, and good spot to cover shorts. You know how I like to take the meat and potatoes out of a trade. I don't stick around to the end. And when you get to what I think is the 8th, 9th inning of a move, you get out. But obviously, sometimes you can't get in too early in case it goes to extra innings. So with that said, real quickly, the chart of the S&P, just to go over what we've been going over this entire time. Here was that head and shoulders top pattern that we've talked about many times, the left shoulder, the head, the right shoulder. The measured move was from 1420 to about 1360. We drew this neckline right across. It pierced it, hovered there, and then here was your follow through all the way down to 1304. So at this point, really good spot to cover your shorts. Question is, was it a great spot to get long? So last night I did take a little spiders, but I wasn't convinced that was it. Obviously, we closed on our lows. So at this point, the next level that I'll be watching is your 1280, 1290, which is the 50% retracement level, and it's also getting really close to that 200-day. So if you want to talk 200-day moving averages, let's put that in right now. It's I think it's around 1280. So let's just make sure. So you go here, enter 200-day. Right now it's at 1278. Perhaps by the time it's all over, it moves up, and there we see it. But at this particular point, you just had a 60-handle clean move down. So if you've been short this time period, congratulations. Hopefully yesterday you covered, and now let's see whether or not we can get any type of bounce to burn it off. Right now, yesterday's pivot, 1304, is the new point of reference. So we're opening up. If they can't hold us up, until Facebook, which is at 11 o'clock, then perhaps maybe we get some type of 80-20 trade where the shorts come in, push us through the low, bring us down to another level of support here, which we're watching, which is around 1290, and then that's where we were last night, and see if we can come back up. But overall, everyone's focus is going to be on Facebook. And we all know that guys working in the company, they're going to be millionaires and billionaires. Guys that do the investment banking for the deal, they're making a lot of money, a lot of commissions. They all got paid handsomely, and I do think that they were all a bit piggy. That's why there's a lot of slack right now that it's going to be a $100 billion valuation at $38. Okay, $100 billion valuation with the numbers and the metrics that have been coming out. Even the smartest guys on Wall Street having a hard time swallowing, but that's because the investment banking firms that got all the angel rounds or the second or third rounds of investors in just kept issuing shares, and they did a piece of business that people were starving for because there hasn't been that many deals out there, and we all know the market environment. So with that said, as a trader, we need to be extra cautious. As a trader, we need to really measure the supply and demand of the deal. We all know in the first 30 to 60 minutes, there's a lot of flippers. There's a lot of guys that got IPO stock that need to sell it. There are a lot of guys who got the free cheese, the free money, and I'm sure 99% of the people watching this aren't one of those guys. So until that deal opens, it's basically the only people making money are the investment bankers, the employees, and the chosen ones who've been involved for the last 3 years. So the question is, can we make money? And we all know I have the art of the first day of trading, the strategy that we put in place to measure how the success of the deal could be on the first day for individuals who are not involved, especially even for investors that want to trade this. We talk about as an investor, maybe you wait 6 to 8 weeks because you can get better prices, but there's opportunity in the first 3 days if it goes well and it trades well and we can measure it. So with that said, you go to the site, look at the charts of the LinkedIn, Yandex, Tumi. They were all great new issues that not only paid the investment bankers, the the angel round investors. They pay traders with the right setup. So for this, we're going to be focusing on the setup today. It's priced at 38. I would say for a successful first day of trading, because everyone's talking about every other metric in Facebook, but they're not talking how to measure the success for the trade, I would say you use our tactic. And our tactic obviously is, if just say you could use this in any hypothetical. And in the blog, I used 48. So 38, they open it at 48. $10 premium, everyone involved in the deal, they get to flip and make $10. Congratulations, Merry Christmas in May. That's not our Christmas present. What typically happens is sometimes once it opens, you write down that price and they push it up a little bit quickly because they always like to goose it. So you write down the open and you write down where they goose it to. And then within that first 15 minutes or so, that's when everyone starts selling. That's when supply comes in. That's when the market makers say, ooh, I'm going to take a step back. I don't need to absorb it up here, but I want to support the deal. Let it come in, let them get their free lunch, but why give them the top? So just say it opens up like at 48, pushes to almost 50, and then starts to trickle lower, get out of the way. Let it trickle lower, let it pull in, let it go down, and then just say, hypothetically, again, because we don't know where it's going to open, it pulls down to just say 44. So there was enough pressure to take it from 48 to 44, $4 lower, and then it puts in a pivot low, and then just say bounces $1 or $2 off that pivot low. Now you have a point of reference. Now you have calculated risk as a trader. Now you could buy 46 versus 44 and say, you know what? It's Facebook. Maybe it's going to work out well. I have a $2 defined risk. I'll buy 46, put a stop in at 44. I'm not going to overtrade it. Then it tightens up for 30 to 60 minutes as the supply and demand meet each other, like you saw with LinkedIn when it did that at 88. Went for about an hour and a half before getting above 92 on that chart that you could see and going to 120. I don't think it's going to happen here with Facebook because of the size and the amount of shares out there, but I'm just saying, same strategy. So then that's your tier one. Then if it goes above 48 or 49, wherever they goosed it to, and trades above it and holds above it, then you put on your momentum position and hopefully it closes 52 to 54. And that, in my opinion, as a trader, would be a successful deal. Means that investment bankers made money, guys who had the new issue made money, traders who had the right strategy made money, and now it's public, and then it's their job to increase their revenues. It's their job to communicate well with the street, because we all know what happens if you don't do that. And it's the same type of strategy if it opened up at 68 and went down to 64 and did the whole strategy and then traded above 68 and then went to 72, 75. Wherever it opens, it's the same type of strategy. You write down the opening price, you write down where it goes in the first 10 minutes, you wait for the supply to come in, you wait for it to stabilize, but sometimes there have been very bad deals. Ren was a horrible deal. Remember, never traded above that opening price and there was not enough demand for the supply, closed below the IPO price and it was junk. Groupon, same thing. Never, opened up, pushed up, went down, and then stabilized and never went back above it, and it wasn't worth any of our time. So that could happen here with Facebook as well. So be prepared for that because of the way the investment bankers put together this deal and priced it with such a high val. So with that said, that's at 11 o'clock. Between now and then, there are other things we need to watch. We need to watch LinkedIn, see how it acts. Zing has been crushed. That's something to watch. People are watching a little Groupon, all the sideshows of Facebook to see how they're acting. Google has been really strong lately because people are saying that at 100 billion valuation, if Facebook opens over 50 or so, it'll be 150 billion, and Google's only at 200 billion. And look at the size and the sustainability Google has and the amount of money they make. There was also talk yesterday with Apple that same metrics for Apple, and you have a 3 trillion market cap stock, and it's only at 500 billion. That would give it a $3,000 price tag. So just real quickly, because we've all been trading Apple. We had a short call a few different times on this. One when it crossed below the 620, and then recently when it crossed below this 560, 555. Now it's coming into the 100-day. I think there's opportunity here. I covered my shorts. I'm looking long Apple. I know it could be tricky. I'm going to look for a little red dog reversal. If it's up $3. If it all of a sudden starts to fade, gets below 530. Comes into the 100-day, I'm looking for a buy setup. I know yesterday I got a little hurt trying to find that, but today I'm going to stay with it. You go the basic studies. A lot of these best acting stocks, or a lot of the leaders, are all coming into the 100-day moving average. So there are times when we watch the 10-day, the 20-day, and there are times when you have to watch the 100. And here's the 100, and then so that's something that we need to watch there, as this level of support I think is pretty compelling. And again, JP Morgan, if we want to just step aside from the news about Facebook, More news that they went from $2 billion to $3 billion loss. We know that it broke the pivot price. The banks have been pressured. I think it's only up 10 cents today. So I think the market can be pressured if all of a sudden JP Morgan, which has been a disaster, starts trading below yesterday's low here. You have yesterday's low of 33.88. That's a new pivot to trade against. We remember we were trading against this pivot. Once this broke below this price here, which was 35.76, you knew that there was more damage to come, and there you go. So watch JP Morgan as far as the banks. Stocks like Caterpillar, battered, bruised. People have been just trying to talk so positively about Caterpillar, but technically it's been so broken. If you look here, you have a high, lower high, lower high. It's been in a downtrend, since the peak. Since it broke this accelerated uptrend, and people just keep trying to make excuses on why to buy it. And look at that. Look at Deere. Same scenario. Wow. That's just gross. Look at this ascending channel here, that broke to the downside. I think we had this off the chart saying look out for it. And this was your sell setup. And then obviously when it broke below this recent pivot. So, at this point, you really need to watch the technicals. You need to watch the composure. For the last week, I've been talking about the McClellan oscillator. Everyone was looking for a bounce before getting to our objective of the 1300 to 1320. I'm like, the McClellan oscillator is only at negative 30. It's only at negative 40. It's only at 45. Big bounces happen, negative 75 to negative 85. I think yesterday we hit around negative 70, so it puts us in the game that if you start a little early, that rubber band can't be stretched for that long before bouncing back up, and then we have to judge the bounce, and then we have to figure out whether it's an oversold feeble bounce or it leads to more. So with all that said, you still have to listen out for Spain. A lot of the banks were downgraded. You still have to listen to see what goes on out of the European meeting. The G8 is still going, I believe, and there's another one over the weekend. So don't just be lulled to sleep by Facebook. Yes, it could provide some excitement. Yes, it'd be interesting to see if we can make some money trading it. Hopefully, overall, they didn't price it too high, and it could be another vehicle for investors and the actual world to make money with. But at this point, you still have to wrestle with the valuation. But on IPO day, it's more about supply and demand. And the way you measure it is by using the art of the first day strategy that we incorporate. So as far as the virtual trade floor, make sure to tune into Sperling. Make sure to tune into Laz, Mike Lee, myself. We will be talking our way through it. We'll talk about the action. We'll talk about the pivots. Mark Sperling makes a living, I think a nice percentage of it, just trading these IPOs because he goes at it, he knows what he does well, and he is really good at trading these IPOs. I'm decent, but as far as I'm on the phone with Bloomberg, I'm all over the place trying to take care of things and make money. He's just focused and keying in on the action, and so will Laz. So make sure, use it to your advantage, and we'll figure out if you hear frustration and you hear banging and you hear kicking, that's because the deal's not trading well. And don't force it. That just means that the supply was greater than the demand. They priced it wrong, and there was no opportunity on the first day, and then we'll just take it from there. Overall, dangerous tape. We're oversold. There is opportunity. I think this is a spot that hopefully you covered your shorts. We'll look to see if we can test some longs for an oversold bounce, and then we'll be watching Facebook and its affiliates today. Tune in today. Virtual trade floor, very, very important. Good luck.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders to understand how to develop an edge in the markets so you can put your money to work with confidence. The T3 Live approach includes a mix of training, trading, and technology to help you learn to recognize, adapt, and ultimately take advantage of different market conditions. So what actually separates T3 Live from other educational firms? For one, transparency. We show all of our positions live, so there is no smoke and mirrors. Basically, we put our money where our mouth is. We have to because we're regulated by the SEC and the Chicago Board of Exchange. Number two, we're real traders. You'll be learning from real professional traders that make a living trading their own proprietary trading accounts, not just instructors that don't trade. Your goal should be to associate and learn from big traders who can teach you how to take your trading to the next level. And three, credibility. Millions of people turn to places like CNBC, Wall Street Journal, Fox Business News, and these outlets actually look to T3 Live for information. No other educational firms are asked to be a consistent contributor. We at T3 Live would like to get you started with a step-by-step method that has been proven over time. The same blueprint for success that I've gone through. It's not a weekend seminar, it's an approach, a mindset, a process to show you how to take control of your financial future. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our Foundation 30-day online home study course. The reason I'm willing to give you such a valuable course for free as I'm sure that once you complete the program, you'll want to continue your education with our team. All you have to do is fill in your name, email address, and I'll see you on the other side.